Howdy, my friends. Thanks for tuning in with the Beach Life Group right here in North County, San Diego. Today, we're going to hop into a little bit behind the scenes, what's going on with mortgage rates, how it's affecting local buyers and sellers right here in North County, San Diego. There's been huge swings to the upside. It kind of dropped down a few weeks back. So where are mortgage rates right now? We got Amir on today. He's going to give us some behind the scenes. He's a local lender. He's one of our preferred lenders right here in North County. So he's boots on the ground, knows exactly what's going on in the market, and can give us some insight. And so if you guys are kind of wondering what's exactly happening, what's the demand looking like, kind of how is it affecting sellers out there, that's exactly what we are getting into today. So let's jump right into it. Thanks for joining us today, Amir. Wanted to first start off kind of what's the current state of mortgage rates? What's going on? Why are they fluctuating so much? What are you seeing?
Yeah, so mortgage rates in general over the last year have been moving north. And there's two reasons why mortgage rates move. One is organic movement, which is what we typically saw between 2009 and 2021, right? Where you see the bond market fluctuate because of things that are actually happening in the economy. And then we have what's impacting rates today. And what that is what I call manufactured manipulation. It's the Fed coming in and raising interest rates. And they raise the central rate, and that cascades to the rest of the economy, mortgage rates included. So what you're seeing right now is Fed is on this warpath and trying to basically combat inflation, right? And so what they're doing is they're raising interest rates in order to combat that inflation, right? The general trajectory is up for a couple of different reasons. It's because they've been hiking rates for several months now, but the inflation is not cooling, right? So what you typically end up seeing when you see big spikes in the market, and today as we're recording this is a great example of a day where mortgage rates went up, even though the Fed didn't say anything. And the reason why that is because the markets are forward looking. They try to predict what the Fed is going to do in this type of environment where Fed is actively making changes. And so they're looking at things like CPI data, which is consumer price index, right? So prices of goods going up. The most relatable context of this is the price of eggs, right? That's been all over the news, right? We're all paying $7 a carton for eggs right now. We're paying $2 before. It's a great indication of inflation, right? So when you're seeing all these inflation data numbers go up, when you're seeing there's tons of jobs in the economy, what that really means is that companies are paying more, so there's more money to spend, which perpetuates inflation. You can start to see that the trend is starting to go up like this, right? And so until inflation softens, you can anticipate that rates will continue to increase. And when I say soften, I mean it actually comes down, right? When it starts coming down, that's when the Fed is going to start tapping the brakes on the initiative that they have right now. So short run, foreseeable future, rates are probably going to be higher in 6 months than they are today.
Oh, that's great to know. Good info right there. Mm-hmm. Cassidy, for you, we work with buyers all the time. We're out in the field kind of writing offers, going to see houses. How is it kind of affecting the local buyers out there? Are we seeing more demand? I know it kind of jumped off at the beginning of the year where kind of January seemed everybody's back in the market. Obviously, rates kind of seem to moderate. How are we seeing buyers out there?
Yeah, like you said, just a few weeks ago, it seemed like a lot of folks jumped in. A lot of buyers got super active that were kind of holding out a little bit. We had a couple get into escrow on a couple properties. And, I think it's starting, especially in the last 3 or 4 days with interest rates hiking a little bit. Again, I think starting to see a little bit of less demand, a little slowing down, a little less activity on our search tools and stuff that we use. Even though it's not huge moves, it still moves in the wrong direction in a buyer's eyes. And we've talked to Amir too about, other options of how to get buyers into escrow. There's a lot of different options for buy downs and things like that too. So definitely starting to see that, but inventory is still not there. So we're still not seeing a ton of properties come on. We're showing a property here, and then maybe in a week showing another property here to buyers. So it's not like we're going out and seeing 5 or 6 properties, which is, in a normal market is pretty easy.
Yeah. And we'll get into at the end, Amir, if you want to give us kind of after we talk sellers a little bit, where's a good spot for people just who are out there? I know you could just Google current rates, but maybe we'll get into maybe give them one resource where go check here. Here's kind of most accurate. I know you're looking at sheets every day and it's a little different. They're just taking kind of averages out there. So everyone's going to be different, but it may be a good spot to keep up with that. So we'll get into that in a little bit. And if you guys let us know what you're seeing out in the market too right now, drop a comment below. If you are just kind of browsing along, you've seen a lot of houses pop up in your searches. Are you seeing prices being cut? Lauren, quickly to you, how are the rates kind of affecting sellers out there? Is it affecting offers coming in? I know we've had some listings pop on in the recent kind of weeks. What are we seeing out there, and how's it affecting sellers?
Well, anything that affects buyers is going to affect sellers, because this whole game is a supply and demand game. And part of what's going to be the interesting dynamic right now moving forward is if mortgage rates stay around 7-ish. Like, for instance, when I'm looking at the numbers for new listings this year and pending sales and closed sales, well, the new listings are down like 31%. The numbers are almost tracking to where the number of new listings and the number of pending, both numbers are down. So we're not gaining a whole lot of ground in either direction, I guess is the most simple way to say it. Closed sales were off 36% the first year to date so far, but the number of listings are off 31% new listings. So, that's pretty close to where the market is. So if you see those numbers flip to where new listings are off or even and sales are down, then you're going to start seeing some pressure on prices. Until we get those numbers different, overall, there's about, in the 11 zip codes I watch daily, there's like 217 listings, detached homes right now. And there's 180 or so in escrow. So they're kind of tracking like not as upside down as this time last year, where you'd have 3 new listings and 15 go pending. So it's an interesting dynamic, because you got to think about it from a home seller standpoint. And if you're a buyer, you got to think about it from, from both sides of the equation. And there's got to be a compelling reason for somebody to sell right now too, because they've probably got an interest rate that's 4% or less, maybe. Yeah. And if they're moving up, are they going to move up with a big gap if it's compelling? To me, this is going to be kind of a year of slogging through it if rates stay in the 7s. The best thing to do is to make sure you find the house you want, and then we'll, start looking at the rate a couple of years down the road, or a year down the road, maybe. So sellers are going to have to look at alternatives. What I would do if I was a seller right now and I have to sell, look what new home sellers are doing to create sales. One of the things they're doing is they're giving some help with points. It depends on the situation too. Hey, do they need closing costs? Do they need money up front to close? Or do they need buy down to get that payment down lower? Everybody's situation is different. So I would look at it that way and make sure your price is a compelling price, a reasonable price. This is not a market to like throw up a high number and see what happens, because I can tell you what'll happen. You'll be on the market a long time. Unless you have something really unique in your offering. This is going to be one of those years, it's looking like, that who you hire to help you both as a lender, as a real estate agent on the buyer's end and the seller's end is going to be super important, because there's a lot of cross currents. I mean, I've been doing this a long time, 33rd year now, which seems insane. But to be honest, I've never seen it so hard. Usually you can see trends and you can start picking out, okay, down the road, this is what's going to happen. We're back and forth still. I mean, there's a lot of cross currents. We'll see some good inflation data come out, and then we'll see some bad, we're going back and forth right now.
And Gary Keller, I think they just had their big meeting for Keller Williams. He was saying he's been in it, 40 something years too, that this is the most confusing market he's seen in his entire time. Right. So stay up to date, see what's going on, and kind of, get educated, because it is changing pretty quick. Amir, on mortgage applications are somewhat forward looking, kind of give you a little bit of idea of anybody getting a pre-approved today is kind of starting that buying process. Then you're looking, anywhere between 60, 90, 120 days out when they actually do end up getting in contract and closing on a home. So it's a little bit, demand for mortgage applications will give you a decent idea of what to kind of expect going forward for buyer demand. Are you seeing a lot of applications come in? Kind of what are you seeing on that front?
Yeah, like about 3 or 4 weeks ago, when rates were kind of dialed back and we saw things soften, right, with the mixed data that was coming from the reports, mortgage applications actually shot up considerably. Refinance even applications shot up. CNBC, you would ask me earlier for like a source to see mortgage rates, which I'll touch base on. CNBC is actually a good source for that, but I'm going to elaborate on that later when we revisit that. But CNBC actually was talking about mortgage rate application data going up, right? So you're seeing people that as rates got a little softer, they got excited and we started to see more pre-approvals come in, right? As they've gone up, people are tapping the brakes again, right? As rates have gone up. Now, my 2 cents is this: there's a lot of power in inductive reasoning. There's a lot of power in looking at like what's actually happened previously and then what's going to happen in the future, right? When you look at interest rates rising, right? When Fed makes these hikes of 50 basis points, 25 basis points, 75 basis points, when they do this, it takes 6 to 8 months for that to ripple through the economy, right? So what we're seeing now, as far as like the impacts, are not from the rate hikes they did last month. They're from the rate hikes that they did back in like July, right? And so the reason why that's a relevant factor, right, is eventually you're going to see the inflation data soften out. When that softens out, you know there's more softening ahead. And rates are going to start coming down like this. And you've already seen what application data looks like for buyers when rates look a little softer. So when they go on the downturn, your competition is going to start heating up. More people are going to start applying. Right now, as we're in elevated rate environments, naturally people are a little bit more scared. But I think that's actually the time to get aggressive and look.
Yeah. Definitely. And on that CNBC, is it just go CNBC mortgage rates, check that out to get kind of the most current rates? Okay. Nice and easy.
It's nice and easy. It's not going to give you an exact, like rates. Yeah. Rates have a lot of things that go into consideration. How much you're putting down, how good your credit is. Are you self-employed? Are you buying a condo or a single family residence? There's just so many factors that go into it. But CNBC is good to understand the trend because they all move in tandem. If rates go up, all the rates on all those programs go up. If they go down, they all go down, right? So it kind of tells you the direction that rates are moving in. But if you really want to get specific about what your rate is, you got to talk to a mortgage professional.
Yeah. And so if you guys have more questions or you are thinking about buying, selling, anything like that, all the info is down below. If you want to hook up with Amir, you want to chat with us, just kind of start that conversation and really, that's kind of the first step because there's a lot of news out there. There's a lot going on. It is confusing. There's a lot of changes every single day. Just everything is down below in the description. Feel free to reach out and we got your back. Would make the move here in North County, San Diego.